All right. All right. Good evening, everybody. Happy Tuesday. Can you hear me okay? My my window's turning green as if it hears me, but I want to make sure that you hear me. Yes. Good evening. All right. Good to see you, David. Good to see you, PJ. Darren, welcome back. Okay. You should also see the screen. I turned the stream on. I'm like early today. That's unlike me. Uncharacteristic, but a pleasant surprise. Good evening to you, PJ. Miguel is here. So you're going to laugh. You're going to laugh at this, Miguel. Because I ordered a monitor. I'm not going to say the monitor. Because all of a sudden, you know, I only need it for a few things. And then there was this Prime Day, and it was just like regular 4K HD for like $70. And then I got like a Capital One coupon for another $5. So it was like $65. I'm like, hell yeah. Because I'm cheap, man. Like, it's just, my kids are like, seriously, still? They're like, you're still just cheap all the time? I'm like, yeah, I'm cheap. It's a badge of honor. My wife's like, she's like, hey, do you want to go clothes shopping? I'm like, yeah, let's head to Costco. Let's see what they have. Oh, she's probably hears me and she's shaking her head like, oh, he's an idiot. Ain't nothing wrong, PJ. Not one thing's wrong. You want to know what's wrong? Nothing. Absolutely nothing. Oh, okay. Good evening, Lee. Good to see you. Good evening, Darren. Where are you located, Darren? What part of the country are you in? Or possibly world. When Sandy gets here, she's down in Australia. Down under. Oklahoma. So, Oklahoma. Speaking of, while we wait 2 more minutes before we start and I turn the recording on. Tonight, what I had for dinner. What I had for dinner were Oklahoma onion burgers on the Blackstone. And I like a heap of onions. Oh, and they just like get so good. It may be the most delicious burger ever. Anyways. Whatever else you do, that's right. Oh yeah. Oh yeah. So good. Anyway, okay. One more minute. We'll get cracking. I would be surprised, man. I think we've got some nice things to talk about. I mean, Tilray, am I right? It was a nice. We'll talk about some things. Okay. Yeah, let's just hit it. We'll get started. We'll get through the disclaimers. I need to get a couple of videos posted tonight, Lee, in the recordings channel. I'm behind on a couple because was traveling. I got home late. Market opened, and I was behind. That's on me. I'll put them in there. Welcome everyone to the Market Watch Group beginner sessions, which means what? This means this is a safe, comfortable place to literally ask any question. I go through. I'm not going to just sit in silence, right? We'll just start talking about the market. And as we do, questions should come up. What are we going to talk about today? We're going to talk about the trading plan. We're on section 1. I'm going to look at a blank copy. I'm going to look at a filled version. So I want you to work. We got some people becoming trading partners as we speak. No, I'm just kidding. We want to be working on that for sure. So let's just go through the disclaimers and get into it. This is educational, illustrative purposes only. We're not brokers. We're not advisors. No warranties, guarantees, yada, yada, yada to the platform. Okay, so let's just get rid of this. What else do we want to do? Yeah, I mean, and here's the thing. I joke, but also not. But look, we are each other's trading partners. I see you guys as my trading partner. This is where I come to sound off. If you don't think I'm here sometimes where I'm like, hey, just want to make sure I'm not like, you guys see what I'm seeing? Does this make anyone see something I don't? It's exactly what we want, but yeah, a lot of people will work individually on the side, set up meetings, exchange trading plan information and things like that. So of course, you guys know I highly, highly encourage that. Welcome, Steven. Good to see you. Dan, good to see you. What do we do on Sunday? If you missed the recording. You know what, Steven? I wasn't on either. I thought I was going to be able to sneak in. I don't actually know. Yeah, I got stuck at the airport in a time where I wasn't expecting to be. So we may have not had. Did anyone come in and have a chat? The last time I came, to be fair, Miguel was like, "Hey, Scott, maybe today you should shut up." I mean, he was a little nicer than that, a little nicer, but he's like, "Maybe you should just let us talk." So I tried to just kind of sit back if someone asked a question, but I do want to think that if I don't come, it still happens. I don't think it requires me starting it, right? Because it's in the. Anyways, yeah. All right. Well, let's talk about our posture from Sunday. Monday we'll call Monday a gimme. It's a mulligan where I'll just reload on next Monday, have a chat. And I'll try to talk less per request. Posture. What do we do? Everything's pretty stable. That's the word I'm looking for. We popped it to 5.25 for Bennett, and then we dropped back a little. Then we got to 5, 5, 5, 5, 5, 5, 2. I mean, this is a pretty stable score at 5. This has been really helpful to me. Sound off if you agree or disagree, but for me, this stability has been really helpful. Holding on to trades where I'm like, do I want to bail? And I'm like, no, just relax. Don't take the loss yet. And I've had some great recoveries. Eventually, you have to take a loss when it eventually gets to a point, right? We saw that with CL. It's not like I'm not going to. It's not like I'm just like, hey, I'm going to ride everything. But this gives us way more ability to just kind of be like, don't panic and take a loss when you may not need to. We're a 5.25. We've been in this area for a while. I think we're right on the cusp of maybe pushing up into the 6s. Let's go. I told you last time I was going to go back in time and find that. So here's where we were in 6s, right? April, March. 7. Oh, goodness. It's hard to remember that now. Look at that. That was stability. Starting when? Starting in December. We hit it in December. 6, 6.5, 6.5, 6.5, 6, 5.25. We certainly blinked. And then 5.25, and then back to 6. Boom, gone. We're ready to go. And then from there, January, we were for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 weeks, almost 3 full months in the 6s. That's in the 6s. We were in the 5s and bullish. We were bullish starting, back in here in November. So I'm telling you, that's what I'm looking for now, is that we've pushed, and now I'm looking to see, can we push to the next level? Can we get a little bit more, get to those 6s? Oh, let's see if we can't. Everyone's feeling it now. Had a covered call, should have been exercised, keep the stock and the premium. Amazing. See? Yeah, it's pretty bullish with only a correction or two. Nothing more than a correction. Consolidations. And I got to say, with our axiom of don't fight the Fed in place, looking for more. Looking for this thing to Santa rally, fall Santa rally, looking to continue into this spring like we did last year. And yeah, I'm ready for it. Okay, what else? So anyone have concern about anything in the posture? Did anyone see it fundamentally different anywhere? I don't think anyone was below 5. Correct me if I'm wrong, anyone who's here. I don't think anyone was lower than 5. It doesn't seem like anyone was higher than a 6. So I would say maybe the median score is 5.5. Somewhere between 5 and 6. Does that sound right? Learning credit spreads. I love it. Expanding the repertoire. The arrows in the quill. Good stuff. Thank you for sharing that with us. Okay, what else do we want to talk about? So posture. Now, a couple of days in, let's just kind of start looking. I'm on the ES. So Monday we sold off. Let me go to the SPY so we can see volume for both of these days. Market's flat right now. So Monday we sold off. What kind of volume? Below average. Nothing there. Nothing there. No concern. Did trades get shook a little? Yeah, probably. But getting shook with a strong market posture above these lines, it's a lot easier to be like, hey, relax. Don't panic and take a loss that you don't need to take. Right? Cut your losses short has an asterisk next to it. We don't just always cut losses short. In a certain market, yeah, I'm going to get the hell out of Dodge quickly. In this market, I'm in a bull market. And there's an old saying, everybody's a genius in a bull market. Right? It's a lot easier for us overall. So, yeah, I'm looking for it. So, anyway, for me, looks good. Let's look at the VIX from today as well. So we popped back up to the old highs here. Starting to come down. Now, let's go back and look at this last time we did something like this. Came down, up, down. So it's still a little bit, but this 9 here, we talked about this day back then, right? Where it was like, looked like it was going to drop. It popped up a little bit. The shadow went higher, but the body didn't, and then we dropped. Okay? So 9.9. Let's go to the SPY and let's see if we think, yeah, that would be a pretty good day to get some confirmation. Right there. 9.9. What did we have? We had a stochastics cross, a turn. We had a bullish Harami. That's a white candle inside of the previous red candle. Red candle bearish. The next day, a bullish inside day. That's what somebody who looks at bar charts would call it, an inside day. Okay. So, yeah. If we see something similar now, then it's even less of a dip, quite honestly. This is hardly a dip at all. Either it's the calm before the storm, because look at this. Back here, we had a dip from 563 to 540. So that's what, 24 points? 4.5%. Here we went from 574 to 565, 2%. And yet the VIX was higher. So either it's an overreaction and we're going to catapult the other way, or something. On September 11th, well, sure. We can go back and say, show. This is where an old trader one time said, "Show me the chart and I'll tell you the news." It was actually not very big volume on that. Well, 9/11 was over here, so you had already had to have been in the trade. And in fact, on this day, it actually was a really nasty fake. Right now, it never broke support. This is support. You can see it never broke support. But even on the 11th, that was a nasty. It opened, it sold down, and it's like, oh man, what's going on? Right? Oh, who said? Was that Miguel? Sorry, Miguel. Miguel, not Steven. Did I say Steven? I'm sorry, guys. Yeah, I don't know. I think let's go look at the calendar for a second. Let's put that in the mix. Let's put that in the mix. More CPI coming. I don't think we need it anymore, but you can see here. Optimism index, no one cares. Trade deficit, no one cares. Tomorrow, dun 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 dun. The one, the only, the hallowed, the esteemed Sir Dr. Austin Goolsbee. Some of those titles may be true. Some of them may be rhetorical. I don't know. It's a political campaign. We can take some rhetorical license. We get the Fed minutes to see if there's any like tipping of the hand to how accommodative are they. I think fairly accommodative. Steven says 1/4 point in November. I agree with that. We'll go look at the Fed watch here in just a minute. Thursday, CPI is expected. Everything's dropping except core. Core is just kind of a stubborn, little stubborn. The CPI down to 0.1 from 0.2. Core CPI 2.2 from 0.3. CPI year over year down to 2.3 from 2.5. Remember, 2 is kind of a urban myth, a government myth. If you look at historically, like the last 20 years or 30 or 25, you're going to find that average inflation is anywhere from 2.3 to 2.5. Now that you add this year in, everything's going to obviously be skewed. It's an outlier. These last couple of years, right? We'll orient everything a little higher. But even before that, it's not like we're ever like, oh, we just sit around at 2%. Certainly there was like a pandemic caused inflation at 1.6. Oil was $8 a barrel. Remember, it was insane. No one was going anywhere. Nothing was doing. Nothing was moving. Nothing. So it was just crazy. Okay. Then we have PPI. We're there. 2.3 is we're there. This might come down a little more, might not, but remember that it's PPE is the Fed's favorite, and it's even lower than these. So Fed watch, what do we see here? These shift, these change their alignment. Remember that now the left one is a quarter point, the right one is unchanged, leaving it unchanged. So 13% chance unchanged, 87% chance of a quarter point cut. I'm in that same, I don't know why it's not letting me move it down so I can see. Let me just refresh this. Okay, comments, questions, let me know. If there's anything I need to look at that I haven't, let me know. You can see it's, this was, up here was a half a point. A month ago, people are like, there's a 17% chance we get a half a point. A week ago, everyone's like, oh man, there's a 37% chance we get another half a point. Now everyone's like, nah, you ain't getting it. You ain't getting it. Are we getting a quarter? I would say yes, we are. And now people are like, well, we may not get anything. Okay, I don't think that. If you go look at a chart of how the Fed cuts rates, once they start, they tend to continue. Let me see if I can find that. Let's see. Can I zoom in? Yeah, okay, here you go. It's not phenomenal, but it's an okay chart. So here you can see from 2008 until 2015, it was basically zero. And then we thought we can do it, and then pandemic comes and bam, right back down, right? We were starting to raise rates. And then when the pandemic hit, it was like bingo, bango, cut it half, and then back to zero for a while. Prior to this, though, when you're in an area like we are here, which we were back in the year 2000 and in the year 2006, once they started, it took from basically, January to January, 1 year, and it dropped 6.5 to 175. 4.75. Here, 5.25 to 0. 5%. I don't think we'll get that necessarily, and that happened in a year as well. Those were to stave off nasty things. We're not in that place. I think we may see it drop down into a place of stability where we're in this area here. This halfway point where we're promoting growth, right? So can we get a 2% cut over the next year? Would that be 2% down to here? 2.5%? Maybe even a little more. So I guess we'll see. Thoughts? Sandy? Oh, Sandy shows up and says yes. I love it. The election will be over, so no pressure on the cuts. Do you feel like they've been that the cuts have been political? I'd like to hear from everyone if you're willing. I mean, I know we get a little crazy in political discussions sometimes. You can just say yes or no. Do you think that the cuts were political? Always, yes. Huh. Okay. I'm gonna say somewhat. I mean, obviously there's politics and everything, but it's I think it's bigger than that. Well, remember, the last time everyone complained about the Fed being what? Too late, right? So look what's happening to us as we look in the mirror. Do we have to say, wait a second, we said we're too late, and now we say, now you're too early? And how would we ever actually measure? How would we ever actually measure to say that was right on time? This is the greatest economic engine civilization has ever known, the American economy, right? Like this is not something you trifle with. We're 30% of the global economy, man, right? And we came out of inflation better than any other country. Something to be said for that. I think you got to give the Fed some credit for that. I'm not giving that credit to administration, mind you. I'm giving that credit to the Fed. But it's an interesting thing. It's like pandemics. They say you either look crazy or unprepared. Nothing in between. Right? So what would make someone happy? I mean, there's always going to be some armchair quarterbacking, of course. I got to say overall, I think we should be pretty comfortable with how the Fed has handled this. Everyone's like, there's no way we're going to get a soft landing. You guys remember that? Oh? And now what? Here we are. Did we get a soft landing? Certainly feels like it. Anyways, what I think is they're in a great place where they don't have to do a panic, but they can actually put themselves. I think if we see them get down between 2.4 and maybe 3, that's like the ideal place. It's low enough that businesses can grow. You can buy houses and cars. You can afford to borrow money to start a business. That's a good place right there, right? A lot of people are banking on that with small caps right now. So if you think it's political, here's what I'm going to say. I say this a lot. Don't allow politics to influence how you see the market. I think it's so funny when they're like, "Oh, the market's going up because they think someone's going." That's madness. That's madness. Utter madness. I promise. Yeah. 6 ain't bad, right? And like if we could get back to like 4.5, 4.25. Here's the thing. I mean, I don't want to brag, but I'm gonna brag. I'm at 2.62. I'll never sell this house. Even if I move away, I'll just like rent it, make my son rent it. I don't know, whatever. But yeah, like 4 or 5 would be great. Oh, you're even. But Steven's like, you want to brag? 2.25. I didn't even know they got down below 2.5. Did you have to pay some points for that? I didn't have to pay any points. How about that? No points. Now I don't know. I'm just kidding. That's a great deal. Okay, so yeah. When we say don't fight the Fed, though, this is what we mean. That there are these tipping points where the Fed decides. They've kind of committed. We saw it here. We saw it here. And now we're saying, okay, where does this put us? Now, I don't think it's going to drop all the way like it did before. Like I said, 2, 2.5, 3, somewhere in that range. Okay. Let's go to the watch list. Let's go look at some stocks. We'll talk about the trading plan a little in the second half. Apple, I'm thinking about it. It's plenty of time. It's sitting right on the 50. We're oversold. We're turning. A mistake to take it too low. Well, and I think those last two times, remember what those were. That was the Great Recession in 2008. Coming out of that, and that was coming out of the tech crash, 2002. And we haven't had anything like that bad, so it's interesting to see the comparison. I think Apple's viable to be looking at. I think Aflac pulled back. I was funny because I was like, okay, who are the insurers in Florida? But there's like a huge range of them. I mean, yeah, it's going to be nasty, right? It's going to be nasty. Speaking of, Lee, how's everything looking? Are you there? Did you evacuate? Are you staying? My understanding is it's Thursday that it's supposed to get bad. Is that correct? Anyway, hopefully it's yes. Well, stay safe. But from a trading perspective, Aflac, I think, could stay in. Okay. Yeah. I hope you're safe. Hope you're dry. Remind me where in Florida you are exactly. I'm going to keep going to some stocks here. We'll keep chatting. Amazon hiccuped. Deltona. All right. I like consumer discretionary as a sector right now. And Amazon had a weird little like boom hiccup, but I still think it's potential. AXP, oh man, it had such a good start, then installed, then bam, and then just kind of pull back. I think that's in a setup mode right now. Time before earnings, but not much. BAC, you got a little pop, and now it's stalling. Got to think about it. BK, well, some did, right? Some financials did. Regional banks doing okay. BK was one that we liked a lot. KKR not as good as BK today. BAC took a break today. You're right. BLDR had a fizzle out last week. As I said, it didn't break support. That's a hiccup. If you stayed with it, you might give it one last movement. Carrier, iffy. So the industrials are a little iffy. You can see Caterpillar pulling back, but this is the first time it's going to maybe be tradable since early September. I like CMG. Did anyone take this today? I'm thinking about this for an alert for tomorrow, so maybe we'll build this into a trade. Sandy, what do you think? This is one that you tend to like. Let me know if anyone's in any of these. In already. I'm like, you guys see? I can predict how some of you trade already. Costco maybe bouncing off the 50. There's some potential there. DIA, flat, Fastenal, Miguel, do you have time before earnings? I just don't think so. We just don't have time. Is that before market? Before market. Yeah, we only have 2 days. If you're going to carry through earnings, maybe. Volatility's high because of earnings. I think this would be one that I'd be more comfortable watching. GBTC. Bitcoin tried to make a little bit of a start, but not yet. GE. Put a couple of GE variants. Higher high, small pullback, starting to turn out of a higher low. GEV, GE Vernova, kind of maybe missed. I don't know. It's already kind of sideways coming out of this. Gold consolidating, but overall still very bullish. Google, is it a hiccup? You can see we tried Pull back, pop, pull back. It's just kind of sitting. I don't know. I'm watching. Home Depot had this one day and then this, and now it's already moving again. That's hard. It's hard to get into those sometimes. IWM holding at the 50. We'll see. KKR. This is tough. This is tough because the sellers can't really do it. I'm going to just maybe think to myself, moving my stop up to underneath this low. The low on this day is 130.23, 130.74. So maybe 129.85 or something in there. I think we started with a stop back below this. So even here, just kind of saying, hey, you know what? I'm going to see what happens, but I need it to start moving soon. So, yeah, PJ, if you're getting a little antsy, that makes sense, and I understand that. But this is where we say, hey, is it just a hiccup? Is my posture going to help? Coke was one that, really, this was kind of this was the hiccup here. It gave a signal, stalled, boom, that's the hiccup. At this point, when it rolls over, that's it right there, you know? We can't just ride it. On KKR, I would say underneath yesterday's low a little bit. So maybe 129.70, 129.85, right? Somewhere underneath that. But again, if you do a hard stop, be careful. You don't want that on first thing in the morning. If possible, you would want to put it on maybe 20 minutes in, just based on where you see things at. I don't like to be dogmatic. Coca-Cola, like we said, just kind of popped you out back here on the second. MasterCard flat. McDonald's. That looks bullish to me. Yeah, that looks bullish to me. That looks like it's close to a trade. Right now, the sellers have the floor. And how have they done? They've pushed it from 305 to 300. They've dropped it a full 1.5%. Oh. Meta's now got up to this old high. I think maybe we'll see a consolidation. I would say anywhere between this halfway point and down into here, I'm fine with it. But I want to be patient. MMM. If it gets the candle, I feel like this has a great opportunity, but the implied volatility is really high right now. So, Steven, what kind of a trade would make sense here? Bull put spread, right? A credit spread. You could actually, you don't have much time for this. I wouldn't hold through earnings, though, so I would actually expect the volatility is probably going to stay high for a while. It's already here. You can see back here, it was high for a couple of weeks. Then it dropped. Morgan Stanley, close to earnings. Microsoft. We said it's got to be soon. And it seems to be trying here. Thoughts? Microsoft up 1.25. You were eyeing it today. NDAQ was one that we said just kind of bounced around. Someone I thought said that they closed theirs. And yeah, that makes sense. Netflix. Sideways, but got some buyers today with big volume. Counteracted yesterday's sellers with big volume. NRG. Okay, so now we have utility plays starting to look attractive like NRG. I like that. NVIDIA continues to be strong today. PEG, a little consolidation, maybe going to turn soon. PGR. Oh, yeah, PLTR is magnificent. PGR is setting up, but you don't have much time before earnings. And I got to say, I'd be a little leery trading into a bullish bounce on insurers 2 days before a Category 5 hurricane. It's going to sweep across the middle of Florida and go from the tip of Florida up to, whatever else maybe up north again. It's ridiculous. So, PLTR. Oh, yeah. The thing for me yesterday was look how minimal that volume was. Did anyone notice that? If you stayed in, what kept you in? Is a question. Still riding some of it. Good. Good. Yeah, it looks great. Trying to remember what my target was on that. Let's see. PLTR. Okay. 4250. Well, it's getting close to 4250, isn't it? Goodness. All right, let's see what tomorrow brings. I would imagine people have been paring it down a little bit. Qs were strong today. It looks like we're bouncing to me. We're trying to bounce. Southern looks viable, but my favorite so far is still the first one. Peg setting up. SPY looks pretty good. Tesla looks good from a technical standpoint. Cup and handle. Time before earnings. I wouldn't hold through earnings, though. TSM looks good. That's one I like, of course. Similar to NVIDIA. The dollar stable for another day. VIX down slightly. VST looks strong on that pullback. Walmart looks strong on this pullback. We got some good stuff. I think we should in the next section. So we're about to our intermission point. And we'll take a little break here. And when we come back, I'd like to just maybe run through some of these trades. And so we'll build some trades, or not build some trades. We'll at least look at some trades. So some trading time, some trading plan time, looking at section 1 together. And is that everything? Did we say I think we wanted to search a little too, correct? A little search time, maybe. Yeah, okay. We'll see if we have time for all that. That's a lot. Any questions about the market, about the watch list, about anything else before we take a quick break for intermission? Steven's checking out. He's been traveling all day. I get that. Good to see you. I actually won't be here in the morning. Glenn's going to sub in for me. I had a conflict, so Glenn will be here in the morning kicking things off, so we can get a chance to talk to him. All right. Well, let's. If there's no questions, let's take a pause. We'll just take about a 5-minute break. I'm going to stop. Oh. Looks like I didn't start my formal recording. No problem, because I started the stream, so I have a version of it. It's not as clean of a version, but this is why I do the stream. So glad I have that. I'll start the recording for the second half when we come back. So stretch your legs, get a drink. Sent you an email with lyrics. Okay, I can't wait to see it. Thank you. I will see you guys in. We'll call it 6 minutes. 8:50 Eastern. I don't have enough time to feed you right now, buddy. I can only feed you when I'm done. All right. Welcome back, everybody. We're going to give it just one more minute before we kick back off into the second part. So we have covered already market posture, feeling pretty good. Talked about market dynamics, looking at the Fed, looking at the remainder of information this week with some CPI, PPI information. All right, let's hit it. I started the recording. Good evening, everyone. Welcome to the second half. Tonight's working sessions for Trading Foundations. This is the intermediate advanced session. So what have we done so far? If you want to go back to the first recording, those of you listening to the recording, we talked about market conditions. We went through the watch list, kind of found some stocks that we think, hey, these are setting up. These are potentials across a couple of different sectors. So those are the ones that we want to explore. We have a little bit of time we want to put into the trading plan tonight. So if you haven't started this week, is section 1. This is your final pass in the year 2024. Your final chance. So, what I said on Sunday, and I'm going to keep saying it this week, this is your last chance for a full iteration on your trading plan. 8 weeks. We're all going to push together. I'm going to spend some time. In fact, maybe we'll do that first. Maybe we'll just spend a little bit of time on the trading plan, and then we'll go straight to trades. I was thinking about searching, but we have enough to look at. So maybe what I'll do is I'll kick searching to Thursday in the second half, and we'll just look at trades today. Okay. With that in mind, our disclaimers. Keep in mind, of course, this is for education and illustrative purposes only. We're not brokers. We're not advisors. We don't give recommendations. We don't give advice. Those are the rules. Let's go to the platform. Let's talk about it. Yeah, I mean, look at this watch list of ours. This watch list of ours. Speaking of, I'm making a note to myself. I'm making a note to myself to update the watch list. Okay. Update MWG watch list. That's going to happen. We've got some great setups. Let's start from the beginning. No, sorry. I already said I'm going to do this first. Trading plan. If you have been prioritizing your trading plan, prioritizing, that means you've been through a few passes. You have a full trading plan. You've gone through it at least 2, if not 3 times, and you have a full trading plan. Then what you did is you went through and you evaluated each section one at a time, and you said from 1 to 10, how strong is this? How strong do I feel about this? The way this defines me, my routines, right? And then you write it down. So the possible score for your trading plan is an 80. That's a perfect trading plan, is an 80. Okay? And then what? Well, once you've gone through that, you find the lowest 2 numbers and you prioritize and you pick one. You work on it. And then you pick the other and you work on it. And essentially you just start to focus. But what I'm saying right now is I want all of us working on here. Personal info. This is critically important because we're going to anchor to our strengths, right? Those are the things that we're going to make sure that our rules are playing to. The timing, the signals that we take, how we take them, the types of trades we build. You need to know your strengths so that you can emphasize your strengths in your trading. Otherwise, what's the point of having strengths? If you right? Like, oh, I'm great at that. Oh, so are you doing that a lot? You're like, no, yeah, it comes and goes as it pleases. Right? What? So that's important because that's going to help us build. That's going to help us build trading rules. These are our systems with trading rules. All of this is going to come from that. Now, the second thing you're going to do is weaknesses. That's important because we need to set goals that improve weaknesses. So whatever the weaknesses are, we're gonna work on them. The rest of these are just statements, a commitment and discipline statement, a mission statement. That's like a business, right? What are your core values and your principles? And the vision statement. That one's a little more colorful. That's your trading, if done right, should change your life. That's what we believe. It should change your life. Retire sooner, retire better, produce a consistent income. Right? This is what trading should give us the ability to do if we commit to it and we learn it. Okay. What does life look like at that point? That's your vision statement. What does life look like then? So you know what you're working towards. That's the colorful part because that's the motivation that helps. Now, what have we provided for you? You're wondering. So that's a lot. Okay. This does not need to be too much. I put 4 strengths, 3 weaknesses as a sample. An ability to maintain discipline and follow rules. That's a strength. Great. So make sure you define really concrete rules so that the rule accounts for a lot. I have a good idea of what my trading flow looks and feels like, meaning when I'm trading at my best. And if I know when I'm trading at my best, I also want to know when I'm not, right? When am I impatient or frustrated and I should be like, whoa, dial back, buddy. I also have a pretty good idea of how to get myself into that flow, right? How do I find that confidence in the plan and that balance in my confidence in how I manage risk? I don't panic easily, even after a small string of losers. I don't love too many, but right, these are the kinds of things that these are traits that we want, right? What are weaknesses? I tend to be influenced by preferential bias. Meaning what? I mean, I latch on to my own. I think these are actually mine that I put for my. These are true for me, for sure. I latch on to my own opinion sometimes, right? And it's like you start when you have an opinion sometimes, right? Sometimes you look for information to confirm that information, and so weaknesses, rush to judgment. That's not always a weakness. Sometimes we just trade fast. I sometimes suffer from outcome bias, letting thoughts wander to the end of the trade. What does that do? It causes loss of focus in the real time. Now I have these weaknesses. Guess what? I can set a goal about this. I can set a goal about this. And I can set a goal about this. 3 goals from 3 mistakes. Trying to make myself better. The aggregation of marginal improvement. But people think like they're going to become better traders. They're like, I need to change my signals. Let's change my signals. Like, that's not how you become a better trader. What are you talking about? This is how we become a better trader. We get all of this, and we're building ourselves and our characteristics, our trading dynamics that are internal. Let's talk about the statements, and then we'll go look at the trades. Commitment and discipline. I am committed. This is just kind of a hey, write it out. I'm committed to become a profitable trader. I'll dedicate myself to the process. I'll put the effort and the time necessary to create a thorough business plan that has rules and methodologies that will produce the results. I'm continuing to monitoring, improving my process, adjusting my plan. Yeah, okay. That's not a lot. Just kind of giving yourself something to hold yourself accountable to. Mission statement. Now, this is one that I worked on for a while. This is mine. This is like I took how do you write a mission statement for a business, and I applied it to trading. My mission is to become a consistent, disciplined, and well-organized organization trader who generates yearly profits with diverse trading strategies. These strategies are adaptable, relying on strict risk and money management techniques. My objective is to be flexible in my approach to the market, ensuring effectiveness in trading despite volatile or changing market conditions. I'll be vigilant in using well thought out and defined rule-based systems Rule-based systems, where does that come from? Oh, that comes from the sample plan. One full set of rules per system. Rule-based systems at all times in order to eliminate emotions from my trading decisions. I'm not trying to trade like a robot. I'm trying to make sure that I don't have emotions in my decisions. This was paramount for me to define it that way, you guys. Like that's a important differentiator from a lot of people who are like, you can't have emotions when you trade. You just got to be like a robot. Like I don't believe that at all. You know that. I don't think that. I think we recognize the chimp is just behind us all the time. You're never quite sure if you got that cage shut all the way, right? Like get it locked. Even when it is, sometimes he can rattle it so loud and violently that it still scares you a little bit, right? Like the emotions are always going to be there. It's our objective to keep him in the cage, keep the professor at the computer. Make sure, right? That's the objective. Vision statement. My trading success will create financial independence for me. That's great. I'll retire 10 years earlier than expected while maintaining the standard of living I've come to enjoy. Further, my success will enable me to achieve 3 long-term life goals. Have additional income to take multiple vacations every year, travel the world, create college educations for each of this is not me, you guys. I ain't got no grandchildren. This will be me soon. No, not soon. In a decade, maybe. No, not even that. 15 years from now. 15 years from now. And have the time and means necessary to give both time and money to my favorite charity, the Make-A-Wish Foundation. Who doesn't love the Make-A-Wish Foundation? So when trading gets hard, when you get frustrated, what do? When trading gets hard and we get frustrated and we say, why am I doing this? What do? We come here. We come here and we say, this is what I'm trying to do with my mission statement, and this is what it's going to lead me to with my vision statement. It's got to be strong because trading can take. I'd like to think that we do a good job of keeping things real. We highlight and emphasize psychology early on, but I can tell you, trading can take you dark places. I've seen it. I've been a part of it, and yeah, you can really second guess yourself, and it easily can bleed outside of trading and into other things if you're not careful, right? Like. A trader one time said, you get what you want out of trading. He was in an interview and the interviewer's like, so you're saying people who lose money want to lose money? And he's like, I'm saying you get what you want out of trading. He's not saying people wanted to lose money. He was saying what they wanted wasn't necessarily to make money. They wanted the thrill. They saw it more like a gamble than a trading, right? What's the difference between a trader and a gambler? 2 words. Positive expectancy. That's the difference between a trader and a gambler. If I'm working with somebody and we go through their log and they have a negative expectancy, they're a gambler. They're gambling. They're throwing trades on hoping something works. That's gambling. Right? Out here in Utah, you get on I-80, you drive west about 2 hours. You run into a border town called Wendover, affectionately called Bendover, Utah. Right? And as you get closer, there's billboards. And the billboards will start to advertise. Loosest slots in town. 97% payout. 97%? That's like an A. And I know you're like laughing, like, oh, come on, Scott. Everything casinos do is backed by just so much research. It's sick because they make so much money, right? To get the formula of all that right. The temperature, the lighting, the fact that you're in a maze and you can't find your way out. Right? There's just so many things that are, but there's also a negative expectancy. The longer you play, the worse it gets. 97-cent payout means for every time you get put a dollar in, they give you 97 cents back over and over again. Negative expectancy. Positive expectancy is that's it. That's what we're looking for as traders. So, questions, comments? Let's go look at trades. I told you we wanted to put a little bit of time into that. Let's build at least one trade tonight together that may become an alert. We've done it already before. I'm looking at Apple. Technology is kind of on the forefront, right, of what we saw. What was it? Maybe we didn't have that. There we go. Tech and NVIDIA lead stock market rebound. If we're going to see it continue, then that may be where it is. We already have things on in PLTR, right? Got into Apple today, Miguel said. We already have PLTR. We already had talked about TSM and NVIDIA, and those are both doing well. So what's left for me from Tech? Apple. So that's one that I'm looking at. I'm going to maybe, let's talk about three and then we'll pick one. That's a little too early. That's maybe a little, I'm not sure. Stop me if you think I'm going too fast. BK, we already have KKR and it's a little stalled. This one looks a little better, but this is so close to earnings. Be careful with anything financial because you're so close to earnings. Still waiting. Still pulling back. I would put CMG as my second. CMG. Sandy took this one already, she said. Now, what do we have? Whoops, that's not what I wanted. That's a continuation. So basically, from here, my objective would be to try to see if I could catch it at a lower price than we closed today. Let's look at today's regular price. We're going to pick one of these. I would say I'd try to catch it if possible back around maybe like 57.60. So if it opens tomorrow and comes down and then pops out of it, that's the way that we can catch that still, right? So we'll look at that for an alert. So Apple, CMG. Let's look at one more as a possibility. Fastenal, that's just so close to earnings. Otherwise, I would for sure like that. GE, no, not really there either. If you think we already have a winner and you want to put your vote in, put it in. Apple. And CMG Burrito Factory. Not yet on Microsoft. A little too early. Tesla, kind of. Okay, I'll put it there. Tesla. If you guys force me, it's like forcing a kid to eat his vegetables. If you force me to, I'll build a trade on it, I guess. All right, let's vote. Apple, CMG, Tesla. 11 people. First to 4, I think, would probably win. So start putting your votes out there. Thank you, Miguel, for recognizing that I'm pushing myself outside of my comfort zone. I appreciate you seeing me where I am in my journey. Oh. Okay. CMG. That's true, right? That's true. If no one else votes, then Lee's going to pick it with CMG. You can pick the one you traded already, Sandy and Miguel, or you can pick a different one. Dan says Apple. I got to tell you, I'm excited to see where you guys point us because I don't know which one to pick. I'm not even going to vote. Oh, you already said Apple? Oh, I missed it. Sorry, David. Sorry. Apple's a David, or David's an Apple. PJ's an Apple. 1, 2, 3. That's 3 for Apple. Curious on the parameters for Apple? Okay. It would maybe it's got to get to 5, I guess, or it's got to go. Someone else has got to start talking about CMG. The race is on. Anybody else want to help shape it? Apple it is, Billy Ray. Billy Ray's like, I'll just come make the executive decision. Billy Ray is known for executive decisions around here. Apple it is. Let's go. I mean, I kind of feel like this is. We put the stop below yesterday's low, right? 221.33. Let's get an alert. Let's get an alert doc ready. And we'll build it together. Teamwork to make the dream work. Am I right? Sandy knows what I'm talking about. She's always in. Which one is this? Have we done CMG? No. Okay. CMG. 10-9. Let's do it. Let's do it. This will be fun. Both. Picking up the boys. Be safe. Tell the boys we said hi. We are bullish on everything. Good to see you, Miguel. Let's talk about entries. So I would say maybe we give it a little bit above, but I would much prefer. Oh no, I was thinking of something else. This is just barely becoming good, I would say. 225, 224, 225.05 is a low, and maybe up to like 226.55. 225.05 up to 226.55. That's in that range. In this range. Right? Our stochastics is oversold. We're just looking to see if this thing can break resistance. It tried back here and it's like, no. And then it ran all the way back up and tried and it's like, no. And then it ran up and tried and it's like, no. Ascending triangle. The buyers keep pushing it up. The sellers haven't pushed it down. So we're thinking, can the buyers bust this sucker loose? And if they do, where would it go? You know, I'm kind of thinking like one of these. This was 210 to 237. That's a 27-point move. So if I'm going from 221, 27, that's 248. That's real close to 250. If I can bust out of that, I should get at least one of these, if not even one of these. So yeah, we'll call it 228.50. No, 248.50. Let's get to the platform here, Apple, and we'll say 248.50. To the downside, we said something. Somebody said something. I think we could go all the way below that. 221, maybe honestly, you could even just put it 0.5%. That's about $1.12 below the low. 220.20. 220.20. 220.20. That's 0.5% below the low as it's establishing as a support. It's about 5 points of risk for about 23. Good to see you, Phil. Thanks for popping in. 220.20 versus 248.50. So, yeah, what do we have here? We've got better than 4-1. What does our volatility look like? Now, great open interest. Tight spreads is what that looks like. Let's go take a peek at the vol. It's a little elevated, but not terrible. I'd probably still look at buying options, to be fair. I mean, 38 days, that's not bad going out to November. I'm not going to hold to November. I'm just giving myself like a little less theta working against me. I'm probably going to go out of the money. I have no problem going even like 10 or 15 points out of the money. I kind of like these 240s right here. Bing. What do you guys think about these 240s? Time frame. Did Miguel leave? He didn't even tell us what his trade was. We don't even know what his trade was. Is he still here? I'm all yelling at him. Come on, Miguel. We don't even know what your trade was. Bing. A little more than 248. I'm going to keep mine where it was, though. I think that's reasonable. Let's go with that. That's pretty much 248.50. When? October 22nd. I'm going to cut that in half to be wrong. October 15th. I need a week to be wrong. Pew. Why am I doing that? Look at this time value. This looks great. We usually try to keep our risk around 250 to 300 as a group, so I'm only going to get 2 contracts here. Makes it a little harder for scaling. What's the solution? Well, certainly you could go one further out of the money. And you could do 3 of those. You could see 300 to make 2,400, 8 to 1. 300 to make 2,100, 7 to 1. Now, remember, we need a little extra time to be right. So 1,900 versus 2,100. Yeah, they're both good. Actually, I kind of feel like I'd go even one further if I'm buying it, to control my risk a little easier. Remember, I'm wrong by the 15th or so it's about 300 in risk. What do you think? What do you guys think about this? Let me go find some comments. Darren, is Darren still here? Did we lose Darren? Darren's like, you got to the advanced and I bounced, buddy. I'm out. Well, I hope at one point I can convince him. Does anyone have any questions about these options? Glenn popped in. Hey, Glenn. Good to see you. Yeah, this is just a speculative out-of-the-money call. What am I looking for? Can Apple break out? Can Apple break out? That's what I'm looking for. Yeah. Okay. So I'm going to go with, wait, why did I put CMG here? We voted Apple. Nobody caught that? Oh, you guys. That was a test. I was testing to see if anyone was paying attention. Paying attention. No one was. That was a pretty subpar test, but all right, let's keep going. Stop range, what are we saying? I went with 2020. I mean, certainly you have plenty of room to give that a little more if you wanted to, right? Depending on, I'd say even another 1% below that. 218 to 22020. That's my range. 22020 is what we're going with, but I think you could 218. Got quiet in here, you guys. Are you mesmerized? Are you thinking about it? Are you playing with it on your end? What are your thoughts? Target is 248.50. Bam. Let's put a take profit target in here. Shall we? Yes, we shall. Let's add it. I would say this 237 mark from this old high. Yeah? 237. Okay. So that was what did we say? 223. 237. 237. Let's now reorder. No, set slices to charts. Sorry. Pop. Okay. There is the potential trade. You can see we're looking for this. Hasn't gotten to Heiken Ashi yet. Remember what we said? We would love if we could get into the last red candle on the Heiken Ashi. And it's always, well, how do you know it's the last red? Well, I don't know, but look at this. Looks like it could be, doesn't it? We have a stop below us. We have a target a little above and then another target above that. We're getting great reward to risk ratio. I like it. I like it. I want to hear from you guys, though. I mean, it can't just be about me all the time. Most of the time is fine. We can all live with that. So, yeah, I like this a little better. I'm willing. Now, look, I want you to notice something about these two. Okay, let's go back to this for just a second because they're both risking about the same $300, right? What's the difference, though? The difference is here I'm losing $12.50 versus $12.78. Actually, I was trying to illustrate a point, and it didn't really help all that much. They're both pretty contained for theta, to be fair. Yeah, I'm actually comfortable with either one of these. So I'm going to get rid of this, and this will be the dog that I pick. Tight spreads. Look at that. 65,000 contracts of open interest. Plenty of business, right? Plenty of business for everyone. Let's put this in. 245 strike. I totally saved this wrong. I'll just put Apple and delete the other one. See what happens when you guys don't catch when I give you tests? It makes things more difficult. Just saying, if you could try to do it. 223. Nope. I don't know why I keep going to 223, you guys. 237. Time in trade, 2 weeks. But that's about 10 days. So I'm going to say 8 to 12 days. Give it a little extra space. The reward to risk ratio, the stock reward to risk ratio, remember, is 248.50 minus, I don't know what that, 248.50 minus, I don't know what that was about, 225.75. So I'm going to go with that. 22.75. 225.75 minus 220.20. 225.75 minus 220.20. 555. 555. 22.75 divided by 555. 4 to 1. 4.09. Stock does even better. Relatively low. Vol assessment, we're going to say cheap. Enough. Preferred strategy, long calls. Anyone disagree? Expiration month. November 24. Sample trade. 265. Nope. 245 calls. 245 calls. Or strike. $245 strike. Approximate cost at trigger. I'm going to say 175 just to be a little safe. Risk per contract about $100. Okay, we'll go with that. They're out of the money, so it's going to be, you can see it's $175 a contract. Because they're out of the money, they're going to be a little bit more than 50% risk. 100 versus 175, more like 60% technically at risk in that scenario. That's a thought process. Give me your thoughts. Give me your questions. Give me your concerns. What will have this come out? I'll probably watch the futures tomorrow, watch the open, and then see if we want to just go ahead and smash it out there. I will do similar process. That's the process right there. What are we doing? We're looking to make sure that we're bouncing. We're getting candles that indicate price action moving higher, bouncing off support levels with stochastics crossing in oversold areas. We're seeing right. So we're seeing good technical information that says what we expect it to bounce and go. And if we can get a pattern similar to the last one, this is what we can get. This is how we can do stops. This is how we can get everything lined up. There it is. You have like a minute or two if you have any dying questions that you want answered about trading and not much else. All right, well, I'm looking for more. I am looking for a bullish fall. I'm excited for it. Things have been going well. I'm looking for them to continue going well. Those watching the recording at home, sorry you weren't able to make it. Those of you watching live, give me a sense. If I put the trade out, if I put the alert out, are you going to take it? If I don't put the alert out, are you going to take it? How do you like it? Scale from 1 to 10. Rate this Apple alert in its present form. If you're lower than a 7, what is your concern? That's the final exercise. Real quick, critical thinking. 8 for David. I like that. I like it. Is it the best trade we've ever seen? No, but it's got a great reward to risk ratio. It's in a good area. Market's good. I would have to agree with an 8. Lee says 8. Dan says 8. All right, it's an 8. We need 5 for a quorum. An 8 or higher. Do you see it 5 or higher? 8 or higher? Put your thumb in. Let us know. Hey, it's good to see everybody. Like I said, Glenn tomorrow. Glenn will be here with you in the morning. Doing the market open. So you'll actually see Glenn twice tomorrow. So you're starting to see Glenn like you see me twice in a day. So you'll have him on the market open. You'll have him on the market close. Thursday, you get a little bit of both of us. Friday, you get a little bit of both of us. And again, keep an eye out for alerts this week because I think we saw plenty of potential in demonstrable show-ups or setups. Good. Glad to hear it, Dan. Thanks, everybody. Good to see you all. Have a great rest of your night. And as always, happy trading.